of rate cuts being pulled further into the future, the markets kept grinding higher. Well, today we had inflation numbers coming out, and the inflation numbers, core CPI less than expected, CPI 0.9%, CPI year over year falling. And then we have the University of Michigan inflation expectations rising to 4.8%. And it's the inflation expectations rising that has created an environment where the Fed Fund futures have pushed that rate cut out another month into October of 2027. The Federal Reserve is stuck right now. They can't raise rates because they will stagnate the economy. They can't cut rates because they will spark inflation. And so the stock market really does have a lid on it from that perspective. If we're thinking out into the future where we're not going to see another rate cut until October of 2027, then this rally that we have witnessed inside of the indices is truly what we call a blessing and the curse of the indices. Well, when you're in a downtrend, you have these moments where we call it the stair steps down and elevator up type of event. And we have been in 8 previous counter trend squeezes just like this. And there's a couple things to bring into this. This little oval that you see right here, that is the first dollar pullback that we witnessed in 2026. And I'm going to go out to that time frame here. You can see this. This is a monthly chart, but I'm going to go down to a 12-hour chart. And you can see that the first time that we had made a pullback in 2026, we were inside of this pullback. And you can see that here. You can see this pullback here. The pullback right here. That is what correlates with this high on the S&P 500 up here. And what happened when the dollar rallied from its long? The market tanked from there. When you look at where the dollar is again, it's in another full retracement from lows to highs. And we're confirming, we haven't confirmed it yet, but we're confirming as we move forward why this is going to be important over the next coming days and weeks is because what we're expecting is that this next traditional long setup on the dollar ends up rallying us into the summer and then into the autumn of 2026, all the way into these larger targets. And then what would happen to the indices in that environment? Well, we're essentially identifying where the extensions fail up here to identify that moment where we're making a lower high, which eventually will lead to a lower low. So the question is in dollar terms and VIX terms and the financials terms, how do we identify the turn? And that is the question that we're going to answer here. When you're looking at it from the perspective of the VIX completed a profit target of an extension here earlier this week. Let me put it on an hourly time frame. We completed an extension drawn from the April 1st lows to lows. And for a brief moment, we were going straight down an extension of an extension. Well, that extension of an extension failed here as we're coming out of the daily doldrums. And what that means here is that we're squeezing right. This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.